Hello traders, Jeff with optionboxer.com. Got another strategy for you today. This one's going to be discussing the vertical spread, or in particular the short vertical spread, and how you can fix it when it goes wrong. All right, so again, there's the title, How to Fix a Vertical Spread Gone Wrong. My name again is Jeff. I have a website, and the website is optionboxer.com. If you like this video, or if you've seen any of my other videos and you like them, please like, comment, or subscribe. It really helps me out. All right, the disclaimer. I'm not a registered financial advisor, and this video is not a recommendation for you to buy or sell any security. Just make sure you're doing your own research prior to placing any trades. Okay, so I also have a trading spreadsheet, which I'm going to use in this video, and I thought since I made it available for people to purchase if they're interested in it, I figured I should start making some videos that include it and kind of how I use it. Possibly that would help somebody to determine if they wanted to buy it. So I'll escape this really quickly. You can see here it's available on my website, Option Boxer Analyze and Journal Spreadsheet. If you just want to use the spreadsheet, which you'll see in just a minute, the analyzed portion of the spreadsheet, I should say, that's available for $39. So it's a one-time fee, and then the spreadsheet will be yours as long as you want it. I should also say that once you pay for it and the payment is processed, it's available for download immediately. My trading candidates for this strategy. So I use AT&T, Intel, Bank of America, or Delta. There's probably 100 other candidates you could use. I use these four because I like them. I'm familiar with their companies. They're all relatively stable companies. I know Delta's probably taken a bit of a hit, maybe more so than the other three on this list due to the coronavirus. But I do like the kind of the flow of the chart there, so I've put them on my trading candidate list. The trading plan for this strategy is going to be, I'm going to try to take profit at 20% or higher, give or take. If it's 15%, so be it, and so forth. But we're going to roll unprofitable trades on expiration day. So if a trade goes against us, I'm going to hold it until the expiration day, and I'm going to roll it to the next expiration month. We're going to use the spreadsheet tool that I just discussed, and I'll show it to you here momentarily to determine the market direction. And my maximum spread width is $5. So if I get into a trade that just continues to go against me and I've reached my maximum spread width of $5, I'll accept whatever that loss may be and move on to another trade. My initial trading criteria, I'm going to trade the nearest expiration month, and I'll talk about this more as I show you on the Thinkorswim platform momentarily, but my initial trade criteria is going to be to trade the nearest expiration month. I'm going to use the 30 to 45 days to expiration month for my spreadsheet analysis. Again, I'll show you momentarily. I'm going to trade the smallest strike with short vertical spread. I'm going to receive at least 50% premium to risk. So if I trade a 50-cent wide spread, I want to at least receive 25 cents in credit. I'm going to monitor the trade daily for a profit, and again close at approximately 20% or higher, and I'm going to hold to expiration if the trade is unprofitable. My rolling trade criteria, so I'm going to trade the next expiration month, I'm going to receive a small credit, and I'm going to monitor the spreadsheet tool for any changes. And then closing, again, 20% or higher. I think you get the idea at this point that I'm looking to make trades that earn me 20% or more of my money at risk. So that is the end of the slideshow. Let's go ahead and pull up Thinkorswim. And let's go ahead and bring the spreadsheet tool onto the screen for you to see it. If you are interested in the spreadsheet, and I think you might be, or I hope that you are, at the end of this video, you can just click here. Please forgive the ads. And you can watch, I've got two videos here that you can watch kind of discussing the spreadsheet tool more in depth and what it's capable of. But this isn't a video to market my spreadsheet, or I guess it is, but it's not the primary concern of this video. You can do everything that I'm going to show you on this video with or without the spreadsheet tool. Okay, so let's go ahead and make this a little more visible so we can see everything. It's fine. We're going to go ahead and use Delta just because I've got it pulled up here on the screen. I'll skip ahead to, let's just pick this day. Actually, let's go to Monday. So I'm going to fast forward to May the 20th of 2019. I just randomly picked that day. I don't know how this trade will work out initially, but before this trading video is done, you will see that it is possible to place a trade that goes against you And then so long as you make the proper moves over time, the trade can still be successful. Hopefully that made sense. All right, so we've loaded up here. I've got my on-demand tool pulled up, again trading Delta, and it's May 20th of 2019, hypothetically. Obviously you can see here in the bottom right-hand corner that today is December 18th, and it is 11:33 p.m. All right, so let me save over here. And let's go ahead and, like I said, about 30 days out, we're going to use that to identify using our spreadsheet tool. So the way we have to write it in the spreadsheet tool is it would be 1906, or I'm sorry, it would be, 190628. So let's go ahead and get that entered. Let's change the ticker to Delta. Give it a second to load up. All right, so we can see, first thing we need to do is take a look again at this data, make sure it's pulling in accurately. So it looks like they're dollar wide strikes for the most part. I won't worry too much about these 50-cent wide strikes. If you are worried about them, it's easily corrected. You can use the 50-cent wide macro here, and it will repopulate with all the data that's available. I'm going to do the 50-cent wide just so you can see it, but more than likely I'll have to do this again as soon as it's done loading here to a dollar wide, just so we get as much data on this spreadsheet as we can. And since there's only a few contracts that are traded at the 50-cent strike, I'm going to go ahead and eliminate them and just use the dollar wide. So while that loads, we can check the data. You can see on this day, Delta was trading for $54.12. And you can see here that the underlying price of Delta is $54.12. Another thing I'll point out is, since I am using on demand, you'll notice that a lot of these say NA, or not applicable. So that means the directional bias up here will not be as effective as if this were live trading. So I'll focus mostly on the max pain area, but in live trading I would of course use the put call ratio. The long-term trend is still viable here, so we could use that. But without the combination of all of these working together, I'll probably eliminate most of that. But again, I would use this if it were a live market. Okay, so now that we've got Delta and everything pulled up, we can see that the max pain strike point is $56. So if we look at Thinkorswim, we can see price right now is at 54, and that would mean that we are of course bullish on the position. We're thinking that Delta will go higher, at least according to the theory of max pain. But just to kind of facilitate our decision-making process, we're going to take a look at the chart. The chart doesn't look particularly bullish at the moment. You can see the RSI is headed lower, the MACD is heading lower, and the stochastic momentum index also heading lower, but also nearing an oversold area here. So we're going to trust the max pain. I think that it looks like, it's kind of, the price has reversed about halfway through this large bullish move here, and it may be getting to an area where it's either going to consolidate or move higher. And if you know anything about short vertical spreads, consolidation can be just as profitable as if you get the directional move that you're anticipating. So the MACD histogram's not telling us too much, so we're just going to trust the max pain. And the stochastic momentum index, again, in oversold territory, we're going to trust that maybe it's nearing a bottom here, and then we'll end up turning higher. So let's go ahead and look. Again, we're going to trade the nearest expiration month. And I need to look one more time, make sure 56 is our strike point. So we could potentially trade here. Let's see what kind of premium we can get for that, the 50-cent wide. So we could take 42 cents. I'm going to actually go ahead and be a little more conservative, and let's see if we can get our 25-cent minimum pretty much right at the money. So we can, and I'll go ahead and lower that down so we can get filled immediately. And now we're into the trade. So we can take a look here. We can see we lost $1 to start with because I lowered it to get filled immediately. Again, in on demand, sometimes you just have to lower it so you don't have to sit there and wait on it. But now we're just going to monitor the trade on a daily basis. So we'll skip ahead a day. All right, buffering has finished. So now we can check our spreadsheet tool, make sure the data is still accurate. Sometimes the link between Thinkorswim, especially in, or I'm sorry, more often than not in on-demand, the link between the spreadsheet and Thinkorswim can, I don't know if malfunction is the right word, but it just loses its connection. And so sometimes you have to save and close the spreadsheet, reopen it for it to pull the data back in. So I do a quick check, 54.89, we're good there. And we can see that the max pain strike point has not moved. It's still at 56. So we can pull that off the screen. We did have a bullish move in the price today, and you can see we made a couple of dollars for that. But I don't think that's at our 20% level yet. Let's go ahead and do some quick math. Again, we had $50 at risk. So it's very near our 20% strike point at this point, or our 20% profit target. So you could close it, or you could, if you're a little more aggressive, you could hold it for a little longer. And for the sake of the video, I'm going to hold it a little longer. Skip one more day, and it went against us. So we got a little more aggressive and we paid the price, but that's okay. That's actually perfect because I want to show you how this works when the trade goes against you. All right, we're done buffering. You can see we're back down to about where we started, and because of that, we're going to hold it again. All right, you can see at some point today, the price did move a little bit higher, higher than where it is at this moment that we're seeing it at 10:07 in the morning. So we are actually down on the trade by just a bit, and that's because we're nearing the expiration day and price has still not moved in the direction that we want. So we're going to hold to the last day. All right, so price did not end up moving in our favor. It actually moved slightly lower, and you can see we have lost $17.50. Unfortunately, on demand isn't perfect, and you can see here on the expiration day that that there is no options to see. So we will have to back up a day just to get the options to pull back up. Sometimes you have to back up 2 days. Some days it freezes up and just doesn't work. If you're familiar with on demand, you already know that struggle. All right, so we're going to go ahead and just set this up, make sure our information is pulling across appropriately. You can see really quickly 54.23 looks like it's good. So we're just going to roll this trade. So let's buy this back, sell that one. You can see we haven't lost the maximum, which is okay. We're going to go to the very next expiration month. Take a quick look here. Max pain is still 56, so we want to maintain our bullish disposition. If I can set it up for the same strike width and still receive a small credit, I will. If not, I'll either have to move higher, further in the money, or spread, or I'll have to widen the strike width. So let's take a look at selling the exact same. Okay, so that's a debit. So what I'll probably do is, instead of moving more in the money, I'll probably just widen out the strike width here. So this is May 31st. Make sure we get the right one. Instead of buying the 54.50, let's buy the 54. And now we're going to take another 16 cents. In live trading, you may have to lower that down by a couple of dollars to get filled. In on demand, I can lower it down by $1 and it should get filled immediately. And we did. One thing you'll notice is since we widened out our strikes, we're now at a dollar-wide strike, which means our risk has changed. But you'll see we've maintained our 50% premium to risk ratio. And so we're going to hold for another week and see if we can't get price to move in our favor. All right, it moved down that day. Of course, we knew that. Let's go ahead and skip to the week after. All right, you can see price moved in our favor a little bit. It's struggling to want to go higher, but it also doesn't seem like it's wanting to go lower at this moment, maybe reaching a little bit of a consolidation area here. So let's take a look at our profit. You can see we're down just a little bit, so we'll hold for another day. So you can see price broke down today. Do need to correct something here. I think the information's still going to be okay. Let's take a look. So I had the wrong expiration month. I was actually using the weekly expiration month of June 19th, or I'm sorry, June 28th of 2019. Now I'm using June 21st of 2019. Make sure the data here is correct. And another check you can do, as you can see here on the screen, the bid and ask prices, if you look right at the money, You can see $1.16, $1.19, so you can check the bid and ask to verify that the data is accurate. So price moved against us again. Our profit and loss is showing the same. We continue to hold. Unfortunately, it did go down from 56 by using this new expiration month. It went from 56 to 55, but you can see price is still below that, so we're still bullish on the trade. Just to kind of highlight a couple more things while I've got this on the screen, you can see the long-term trend is bullish and the skew is bullish. We can trust these two indicators. So the three that are properly functioning in on-demand are all indicating that this is a bullish candidate, so we're going to maintain our bullish bias. All right, so again, our profit and loss is going to indicate an even larger loss, and at this point, I'm sure you're becoming worried, but not to fear. We'll continue to hold until the data suggests otherwise. All right, so again, we had another drop in price here, and at this point, the moving averages are looking like maybe this trade is going to reverse. I don't see any indication that it's going to continue much lower, so we'll hold and see how it does on the next month. Fortunately, we have to close this trade again, excuse me, and roll it to the next expiration month. Again, going to try to maintain the same strike width and still receive a credit, which I know we can't, because you'll see we're paying a $1.01 to close this existing trade. So we're going to end up having to widen the strike width again. Sell the 55, 54. That's the exact same trade we had open the last expiration month, but unfortunately we're going to have to widen out. So make sure I get the right days here, June 7th. So instead of buying the 54, let's buy the 53.50. You can see we're going to take another credit. Okay, so our short strike is now at 55. Let's take a look at our spreadsheet. Let's make sure the data is accurate. 52.49, 52.49. You can see the long-term trend has now turned to bearish, but the skew and the max pain are still bullish. So we'll maintain our bullish bias for now. All right, so you can see the last trading day, it went down considerably lower while we were in the trade, and price has rebounded to cover those losses, but it doesn't cover the losses we had already endured prior to that. So we're pretty much break even, but overall we're still down by $57 on the trade. So we're going to hope that this new bullish move will continue and price will move higher. All right, you can see price moved considerably higher on this day, and let's take a look at our profit and loss. You can see we're now down by only $11 on the trade. So we're going to have to hold a little while longer and see if we can't get this some of this net liquidity into our profit balance there. With a strong move higher, I'm expecting another move higher. Also, you can take a look at the technical indicators. You can see that RSI is moving higher now. The MACD is curling over, the histogram is starting to tail off there, and the stochastic momentum index has also turned upwards. So looks like all signs point to a potential bullish move. Verify the data, 54.19. 54.19 is the current trade price. You can see the skew has now turned bearish. The long-term trend is again now above the 52-week average of 53.20, so that is bullish. And then the max pain bias is still bullish as well. So we'll maintain the bullish bias. So you can see the trade has now turned profitable, and we can do some quick math to figure out we had a $1.50 wide strike, I believe. Yeah, $1.50. So some quick math, we can say we've made 85 out of 150 and see what that math comes to. And that would be a 56% profit on this current trade. But if you wanted to do the true profit, you could do the 28 divided by 150. That would leave you at 18%. So let's, if this were good enough for you to close, then so be it. Unfortunately, we've set our parameters to make 20%, and so we're going to hold for one more day and see if we can't get it. So we lost a couple of points there. You can see we've now only got $83 in profit. And after this day, it might be a good idea to think about closing it, but I think the technical indicators, at least the MACD and the RSI, are still supportive. We still haven't reached the 55 level, so max pain is still bullish and the long-term trend is still bullish. 54.87, 54.87. All right, and you can see our patience paid off, and holding it to the very last day has rewarded us handsomely. And now we can do the quick math. 61.50 is our total profit on this trade. Divide that by 150, which is our strike width, gives us a 41% profit on this trade. So we're going to go ahead and close that order. Unfortunately, we'll have to back up a day. Well, for the sake of this video, if this were live trading, there would obviously be data here, but unfortunately, on demand is experiencing some difficulty, which again, if you're familiar with on demand, you know happens quite frequently. But you can see on the current trade, we've taken out the bulk of the premium that was available to us, and we've made $61 for our efforts. So let's take a look at when we made our first trade. We made our first trade on 5-20. So on the 20th, so we had 1 week, 2 weeks, 3 weeks. So it took us 3 weeks to make 40% on our risk. And so I think that's acceptable. It certainly, seems like a good trade to me. Please understand that you can also trade more than one contract. For the sake of this video, I only traded one. In all honesty, when I trade this in a live market, I typically only trade one, possibly two, depending on how I feel about it. If I'm feeling really strongly bullish, or if I'm just feeling particularly risky that day, I will trade two contracts. But depending on your account size and what your risk tolerance is, you can certainly trade more than that. Just understand that this downtrend that was ongoing here could continue, and so you may have to end up holding it longer than the 3 weeks. It could reach 5, 6, 7 weeks before the trade turns around. In this instance, we were fortunate that it went in our favor almost immediately. But for the sake of this video, and so that you understand that this strategy is something that I do use and that it is viable, again, not recommending you use it, but I'm just going to pick another random day. Let's go to July 19th. All right, so now we need to set up our new criteria here, make sure the data pulls in appropriately. So we're going to trade 1909.27, 58.70, 58.70. Max pain strike is 58. Skew is bearish. Max pain is bearish. So now we're going to want to get bearish on this position. Make sure the data is right on the screen here. Doesn't appear to be accurate at this moment. Let me make sure I got my data entered correctly. Okay, and I see the mistake that I made. I had 1909.27. I don't know why I keep making that mistake, but you can see now the data is pulling in appropriately. If I slide this over, you can see bid 162, ask 167. All right, so the information is good there. Let's take a look at the max pain is 60, so we're bullish according to max pain, and we're bearish according to the skew, but bullish according to the long-term trend. So we will maintain our bullish bias for this trade, or not. Well, unfortunately, we will maintain. I think I misspoke a second ago, and I said we would become bearish, but we're going to go bullish just based on the data we're receiving. We can take a look here at the chart. You can see the stochastic looks like it's turning higher. MACD looks like it's turning higher, and RSI appears to also be turning higher. And we also have a longer term uptrend here. So I think all signs point to becoming bullish on this trade. Let's go ahead and see what we can get. So again, the max pain strike was 60, so we'll trade if we can get the premium that we want. We'll trade just below it, and we did, so we'll get filled there. Now we'll step ahead. All right, so price moved slightly against us there. I'm just gonna step ahead again. All right, again, price moved against us, and you can see it's eating away. Okay. Oh, because I didn't close the last trade. Well, darn, that's gonna impact what we're able to see. So we're gonna have to look here, and you can see we are currently losing money. I'm not gonna do, it looks like $12 or so. It's unfortunate that we're not going to be able to see it as clearly now, but that's okay. We're waiting for a bullish move. It looks like this wants to continue a bit lower before moving higher, and so we may have to hold on to this trade for a while. We'll see how it plays out. All right, so we lost some more money there. See, we're down by $15 on the trade. All right, so you can see the trade has gone significantly against us. So we will have to roll to the next month. I'm sorry, I think I've said month several times. Roll to the next week. Try to set up the same trade as we had to begin with, if at all possible. Let's double check, make sure the data is good here. 57.11, max pain strike is still 60. So we had the short 59.50. Long 59. So we will have to go ahead and widen out our strikes, or we could potentially both lower the strike and widen it at the same time. But for now, we'll just widen it by 50 cents to collect a small debit or a small credit. Make sure I got the right month, August 30th. So we sold the 59.50 and we bought the 59. Let's buy the 58.50. In live trading, we'd probably have to lower that. You can see there's quite a wide spread there. For the sake of this video, oh, unfortunately, we will end up having, you can see this NA right here and on demand. We will end up having to cancel that order. We will end up having to roll down a little bit. It's okay, as long as we set up based on our criteria, we'll still be okay. So instead of the 59.50, we'll have to sell the 59 and probably widen to the 57.50. Let's see if we can get away with 58. And we can. Or it appears as if we can. All right, so we bought ourselves a little bit of a cushion there between the 60 max pain strike, and we've also widened it out by another 50 cents. So now we're holding on to a spread that is a dollar wide. Is that correct? Yes, $1 wide. All right, so we'll go ahead and fast forward again. All right, so you can see price has moved considerably against, or it moved considerably against us the last trading day, and then today it actually gapped up and then proceeded to push lower. All signs point to this moving lower in the near term. 56.28, 56.28. Max pain still bullish. Long term still bullish. You can see we're down now by around $20 or so on this new trade. We'll continue to hold. All right, it moved in our favor today, but I don't know that it moved enough, and it doesn't look like it did. So we're going to need some more bullish action here. And similar to our last trade that we made, the price went down, 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 and then shot up. Looks like it's attempting to do the same thing here. You can see our profit and loss when we started this trade was 61, so we're still down by about $30 overall. Let's make sure we got enough liquidity there that we can still get where we're trying to go. And it looks as if we do, so we'll hold another day. So you can see overall we've broke even. So if you didn't want to, you can see we're at 62 now. When we started, we were at 61, so we've basically made $1. If you didn't want to roll this trade, you can see we're out of days here, so we've got to make a decision, because if we don't, our short strike here will be assigned, and you'll have to either exercise your long put there, or you can just roll out, which is what I will do, because we haven't made the 20% on this new trade that I want to make on every trade. So we're going to buy that, sell that, go to the next month. So we sold the 59, bought the 58. We will have to widen out again to the 57.50. Make sure I got the right month, September 6th. Take another small credit. And now we're on to the next one. So let's see if we can maintain this bullish stance. Double check, make sure data's good, 58.42. Max pain's still 60, so still got a little bit of room to move here. Looks as if the MACD is attempting to turn higher. The histogram is certainly moving in a bullish manner. The stochastic momentum index is moving higher, not yet in an overbought area, and the RSI is moving higher. So we'll see if all those indications help us in our quest to reach the $60 area. I will say that price, tried to go higher this day. We probably could have taken some more profit if we had gotten in earlier in the day and closed it, or if you had a trade set up to automatically close, or to close once a price level was hit. You may have reached it on this day, but the price looks like it has drawn back a little bit from the 50 period moving average line. So we'll hold for another day, see what happens. All right, unfortunately price moved against us. Taking a look at the spreadsheet, data's still good. Max pain still 60, long-term bullish, max pain bullish. All right, again, didn't go in our favor. You can see our profit and loss there is showing the same. It's just difficult to see from here, but you can see we're down by about $40 or so, and that would indicate it is indicated there. Let's continue to hold. All right, so we got a move in our favor, and you can see our profit and loss shows the same. Something I will highlight here is you can see the max pain strike has changed from 59 or from 60 to 59, and that's not a good indication on a trade that we are bullish on. However, price did move in our favor, and it moved in our favor enough that we had 61, so we're up by $16 on this trade. So let's take a look. So we've got $1.50 wide. I don't think that's going to be enough. 16 divided by 150. That's only 10% profit. However, with the max pain moving lower and price trying to go higher and then retreating again away from this 50 period moving line, a conservative approach would be to close the trade now while you've got a small profit, and move to the next one. For the sake of this video, we'll play it out. So you can see nothing's really changed on our profit and loss, so we will have to roll this trade again. With the new short strike being at 59, let's see if we can, probably going to have to go to 57 this time. And let's continue to hold. See, we're back down to about break even on the trade. If you wanted to get out now, you could certainly make that decision. Up just slightly from yesterday. RSI seems to be flattening out. The MACD does seem to want to be moving higher. Stochastic momentum index is also flattening out. So we're probably entering a bit of a consolidation phase here, which means we could potentially hold on to this and tie up our funds for, as long as it takes to reach our target, or before we get to a $5 wide strike. I believe at this point we're at $2 wide. Yeah, $2 wide. So we've still got some room to go and trade within the parameters of our plan. Or we could take our small $10 profit and use our money possibly somewhere else. But again for the video. We'll play it out. All right, so we're back down to break even after a down day. Skip ahead. All right, and it looks like we've achieved our profit target on this day, as price looks to be right at the 59 level, and we're just out of the money, which is perfect. So let me do some quick math here. So 54 divided by 200 now, because we have a $2 wide stripe, puts us at a 27% profit on this trade. And with that, we'll close the trade. Well, I won't close the trade, but you can see here in, let's see, when we made our first trade, I think it was 5-20. So 5-20, have to go way back. Just want to count the weeks. So that's 1 week, 2 weeks, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 weeks. So it took us a long time to get there. That second trade took a considerable amount of time. Well, I guess 17 in a couple of days. But at the end of it all, you've never really had that much money at risk, and you made $115. So it's a nice strategy. It's an easy strategy once you understand the parameters of it. If you're interested to receive the spreadsheet, or not the spreadsheet, but the PowerPoint that I made at the beginning of this video so that you understand, you just email me or just reach me in the comment section and I'll send it over to you free of charge, no problem. But if you're interested in the spreadsheet tool, please check out the videos I have on that, and that way you can have the same information that I have to trade this strategy. But again, it was effective. If you multiply that by 10, now you're looking at 1,015. Again, it all has to do with your risk tolerance and what you're able to endure and still sleep well at night. For me, it's usually 1 or 2 contracts. It's just a small percentage of my portfolio. Most of my other money is in different stocks and a little bit of a diversified portfolio. And so I try to trade a number of different strategies, which if you don't know by now, or if you haven't seen any of my other videos, you'll know that I have a number of different strategies I'm attempting at any given time. And so anyhow, this is just one that like I said, I like. It's effective, and I hope you've enjoyed the video, and I hope you get some value out of it. If you have any questions, you're free to reach me anytime you want. Thank you for watching. See you later.